I want you to picture a version of yourself 20 or 30 years from now. Imagine you wake up on a Tuesday, you don't have to go to work, you make coffee, you walk outside, you check your bank account and you see a transfer hit. It's enough to cover your bills, your groceries, maybe a trip to see your family. Now here's the critical question. The question that keeps financial planners awake at night. When that money hits your account, does the government get a notification? Do they get to take a slice of that coffee, that trip, that peace of mind? Most people in this country are building a retirement that they don't fully own. They are building a nest egg that has a silent partner attached to it, a partner that can change the terms of the deal whenever they want. We are in 2026 now. The financial landscape has shifted. The tax rules we grew up with are evolving. And if you are still operating on the save and hope strategy from 5 years ago, you might be walking into a trap. Today, we aren't just talking about a retirement account. We are talking about the only legal way to divorce the IRS from your future. We are talking about the 2026 Roth IRA and why this specific year might be the turning point for your financial freedom. If you've ever felt that subtle anxiety that you're working hard, but the system is working harder against you, this conversation is for you. Here's the problem. When most of us hear Roth IRA, our eyes glaze over. We think it's just another bucket. We think, okay, I have my 401k at work, I have my savings, maybe I'll toss some money in a Roth if I have leftovers. We treat it like a side dish. But I want to reframe that completely. I want you to stop thinking of the Roth IRA as a retirement account. I want you to think of it as tax insurance. Think about your car insurance. You pay a premium every month so that if something catastrophic happens, a crash, a theft, you are protected. You are hedging against the unknown. Now think about your life. What is the biggest unknown financial variable in your future? It's not the stock market. The market goes up and down, but over 30 years, it goes up. The biggest unknown is tax rates. Right now, in 2026, we are living through a very specific tax environment. We have seen rates fluctuate. We have seen national debt climb. Do you honestly believe that 20 years from now, tax rates will be lower than they are today? If you think taxes will be higher in the future, then every dollar you put into a traditional 401k is a gamble. You are betting that the government will be kind to you in the year 2050. The Roth IRA is you saying, I don't want to take that bet. It is you choosing to pay the tax on the seed today so you don't have to pay the tax on the harvest tomorrow. And in 2026, with inflation where it is and the cost of living doing what it does, that psychological safety, knowing that your money is 100% yours, is worth more than just the math. It's about sleep. It's about dignity. Let's look at the playing field for this year, because the numbers have moved. For 2026, the IRS has adjusted the contribution limits again. If you are under the age of 50, you can now contribute up to roughly $7,500. I say roughly because they adjust these for inflation, but let's use that as our baseline. If you are 50 or older, you get that catch-up contribution pushing you well over $8,000. Now, pause for a second. $7,500. When you look at that number as a lump sum, it feels heavy. It feels like a lot of money to find in your couch cushions. But let's break that down psychologically. That is $625 a month. That is about $20 a day. I know things are expensive right now. I know groceries cost more than they did 3 years ago. But I also know that most of us, myself included, leak $20 a day on convenience. We buy the lunch because we didn't prep. We keep the subscription we don't watch. We upgrade the phone plan we don't need. The Roth IRA game isn't about earning more money. It's about capturing the waste. It's about redirecting that $20 of convenience into a bucket that will buy your freedom later. But there is a velvet rope. The government knows this deal is too good to be true, so they don't let everyone in through the front door. These are the income limits, the MAGI, Modified Adjusted Gross Income. If you are single in 2026 and you make under roughly $155,000, you have the green light. You can contribute the full amount. If you are married filing jointly and your household makes under roughly $230,000, you are good to go. If you make more than that, don't turn this video off. There is a backdoor key that we will talk about in a minute. The wealthy use it every day, and you should too. But first, I want to talk about why we are doing this. Why lock this money up? This is where the psychology gets tricky. People tell me all the time, Nick, I don't want to lock my money away until I'm 59 and a half. What if I need it? What if I lose my job? This is the biggest myth in personal finance. The Roth IRA is not a prison. It is a vault with a very specific door. Here is the rule that changes everything. You can always withdraw your contributions tax-free and penalty-free at any time, for any reason. Let's say you put in $7,000 this year. 2 years from now, life happens. The car breaks down. You need that $7,000 back. You can take it out. The IRS doesn't care. You already paid taxes on that money. It's yours. What you can't touch is the growth, the profit that money made. But the principal, that is your emergency fund of last resort. Knowing this changes how you feel about depositing the money. You're just moving it from a pocket with a hole in it, your checking account, to a pocket with a lock on it, your Roth. Now let's get to the magic part, the part where the math starts to look like fiction. I want you to imagine you max this out in 2026. You put in your $7,500, and let's say you never add another penny. You just let that single year of contribution sit there for 30 years, growing at a standard market average, let's say 8%, which is historically conservative for the S&P 500. That single bucket of money, that $7,500, turns into nearly $76,000. You put in 7, you take out 76. And here's the turning point. When you pull that $76,000 out in retirement, the IRS gets 0. Nothing. If you had done that in a traditional 401k, the IRS would be waiting at the finish line saying, thanks for the growth, I'll take 25% of that. But in a Roth, you defeated the tax drag. Now imagine doing that every year. Imagine stacking those years. 2026, 2027, 2028, suddenly you aren't just saving for retirement. You are building a tax-free kingdom. This is important because of something I call the provisional income trap. Many retirees today are finding out the hard way that Social Security is taxable if you make too much other income. If you pull money from a 401k, it triggers taxes on your Social Security. It's a domino effect. But Roth IRA withdrawals, they are invisible. They don't count as income. They don't trigger higher Medicare premiums. They don't trigger Social Security taxes. By maxing out your Roth in 2026, you are not just saving money. You are simplifying your future life. You are giving your future self the gift of not having to hire an accountant just to buy groceries. That is what we are buying. We aren't buying a yacht. We are buying simplicity. I promised I would speak to the high earners. Maybe you are sitting there thinking, Nick, I make over the limit. I'm penalized for doing well. No, you aren't. You just have to take one extra step. It's called the backdoor Roth IRA. It sounds shady, I know. It sounds like something you'd get arrested for. But it is completely legal. Congress has known about it for years, and they have left it alone. Here is how it works in 2026. You open a traditional IRA. You put your $7,500 in it. You do not take the tax deduction. You leave it as non-deductible. Then, usually the next day or as soon as the funds settle, you click a button on your brokerage website that says Convert to Roth IRA. Since you didn't take a tax break on the money going in, you don't owe taxes on the conversion, assuming you don't have other traditional IRAs sitting around. That's called the pro Rata rule. Look that up if you have existing IRAs. Boom. The money is now in the Roth. It's in the tax-free kingdom. It takes 5 minutes of administrative work. And for those 5 minutes, you unlock decades of tax-free growth. Do not let a little bit of paperwork stop you from claiming your share of tax-free wealth. So, how do we actually do this? How do we win in 2026? I want to give you a simple 3-step framework. Step 1, the automation test. Willpower is a finite resource. You might be motivated right now watching this video, but next Thursday when you're tired and Amazon suggests a new gadget, your willpower will be gone. You need to remove yourself from the equation. Set up an automatic transfer for payday, even if you can't do the full amount. Start with $200 a month, $100 a month. The amount matters less than the habit. You need to prove to yourself that you are an investor. Step 2, the boring buy. Once the money is in the account, you have to invest it. A Roth IRA is just a bucket. If you leave it in cash, you lose. What do you buy? If you want to sleep well, you look at the whole haystack. A total stock market index fund or an S&P 500 index fund. In 2026, the market will be volatile. It always is. There will be headlines about wars, elections, interest rates. Ignore them. You are not a trader. You are an owner. You are buying a slice of American commerce and holding it for 30 years. Let the companies do the work. You just hold the receipt. Step 3, the spousal play. I see so many couples miss this. If you are married and only one of you works, or one of you makes significantly less, you can still open a spousal Roth IRA. That means you can double your limit. Instead of $7,500, your household can put away $15,000 in 2026. That is massive. That is life-changing money over a decade. Now, I know there is someone watching this who feels a tightness in their chest. You're thinking, Nick, this sounds great, but I have credit card debt. I have student loans. I barely have $50 left at the end of the month. I hear you. And I want to tell you that it is okay. You don't have to max it out to matter. There is a psychological concept called the identity shift. If you put $50 a month into a Roth IRA, mathematically, it might not make you a millionaire. But psychologically, it changes your identity. You stop seeing yourself as someone who just pays bills and you start seeing yourself as someone who owns assets. That shift, that is priceless. Because once you see yourself as an owner, you start making different decisions. You start looking for ways to clear that debt faster so you can invest more. You start looking for ways to increase your income. Do not let the perfect be the enemy of the good. If you can't do $7,500, do $500. Just open the account, plant the flag, tell the world, and tell yourself that you are in the game. I want to leave you with thought about enough. We spend so much of our lives chasing a number. We think if we just hit 1 million or 2 million or whatever the number is, we will feel safe. But I've met people with $10 million who are miserable. And I've met people with $500,000 who are the happiest people I know. The difference isn't the total amount. The difference is the control. The Roth IRA is a tool of control. It is you taking a small stand against the unpredictability of the world. It is you saying, I don't know what taxes will be. I don't know what the government will do. I don't know what the economy will look like in 2050. But I know that this money is mine. In 2026, the world is going to get noisy. There will be a lot of fear. There will be a lot of people trying to sell you gold or crypto schemes or the next get-rich-quick thing. Stay the course. Be boring. Be consistent. Fill your bucket month after month, year after year. Because the ultimate luxury in life isn't a fancy car. It's waking up on that Tuesday morning, 20 years from now, drinking your coffee, and knowing that you are absolutely, completely free. If this guide helped you clarify your strategy for 2026, do me a favor. Share this with one person. A friend, a sibling, a spouse. Who needs to hear it? Let's get more people to the table. And tell me in the comments, what is your why? What are you actually buying with your freedom? I read every single one. I'll see you in the next one.